Okay, good morning, folks. Welcome back. Thank you for the break for Thanksgiving. I greatly appreciated it. Had a wonderful time with my family. Hope you had a pleasant weekend as well where you're at. If you had Thanksgiving celebrations, hope you found yours as pleasant as mine was. All right, so we're going to be closing the November content delivery here in a few days, and we'll be beginning the December content, which brings us to a lot more focused study on time of day, specific order blocks, liquidity pools, voids, and such. We're going to be utilizing a lot more of the tools in December because I have to close that portion of the content before we can get into the new material in January. The topic I'm going to talk about today is the kill zones, how to set them, how to set your indicators that I gave you for November, so that way you can create your template. Every time you open up your chart, all you got to do is hit your template and it'll load up and it'll put everything in there and populate your chart as you would need to look for the things we're going to talk about today. It's not going to be a long-winded session today. It's just basically covering what we're going to be doing to set it up, why it's useful, and then we're going to be introducing more concepts in December and how we're going to use all that. So the first thing we're going to do is get myself comfortable first. That's the first thing. All right, so let's take a look. Now I cannot see your if you don't have MT4, you're just going to have to create something equivalent in your own platform. Part of the mentorship was I'm teaching through the MT4 platform itself. Obviously, you can set this up on your own trading platform. You're just going to have to set it up with your own tools and such. I'm just giving you the things I use for MT4. Okay, so I cannot see your questions or comments. I want to be able to get through this relatively painlessly. All right, so what I have on the chart here is basically the kill zone indicator down here, which is basically the market hours indicator. Now, if you do not have this for your MT4 platform, if you have never downloaded it, if you've never gotten it, if you've never received it by way of me or others that have made it available, you can get it through the November content post. It's underneath the MT4 indicators. The indicator itself is market hours. Okay, that's what that is. Now, the settings for it, okay, this is how I have mine set. London Open, I have it 6. Now again, this is for Forex Ltd's MT4 platform. So if you're looking at the charts like I suggested at the beginning of this mentorship, you need to have your Forex Ltd data in the MT4 platform. That way your charts look exactly like mine. Everything that you see in my charts in the discussions or the recaps or the teachings, they'll be the same thing as it is in my chart. Now, there's, like I said before, there's going to be some discrepancies amongst all of the data providers because that's the nature of the business. There's going to be some slight variance in it. And that's the price you pay for trading retail. But the London Open, I have it set for 6. London Close is 10. New York Open, I have set for 14. 17 for New York Close. Tokyo 11. And 14. Now, the reason why I have it like this is because this is actually the London Close. I'm sorry, the New York Open and the New York Close. That right there is actually utilizing my end of day or London Close scenario. So since there's no identification for like the London Close kill zone, okay, what I actually did was I put the data in because I want the chart to show up the way it's showing here. Now you can change this any way you want. You can move this all around. You can make it Sydney, whatever, but you need to have 3 of them set where one is 6 to 10, 14 to 17, 11, and 14. Now, the reason why this is these times, let me explain what they are. The London Open is 6 or 1 a.m. in New York time to 10. 14 to 17, what that is that's the London close or the profit-taking time period of the day. The New York Open is going to be delineated by 11, which is 7 a.m. to 14. Okay. Okay, and graphically what that shows us is, I have the colors set like this also. There's two greens because I don't really have the Asian session highlighted. Now you can obviously add an Asian session. I don't care about Asia. I could care less about Asia because I'm using that time of day for a different purpose. And we'll come back and I'll show you the other settings for the other indicators in a minute. But the output is this. You get the London kill zone, blue. You can set these colors wherever you want, but if you want to keep it germane to what you see in the charts, this is how you do it. And then you can obviously, once you get done going through the mentorship, you can change all these colors the way you want them to look. And the New York kill zone is the green, and the profit-taking portion of the day is the red. Now, I'll talk more about this because it's augmented certain times of the year, where one half of this is more sensitive than the other. You can go through and look at pretty much every day the major swing point highs and lows. Here's the London high, the New York session reversal low, and another little turning point during the profit-taking portion of the day, on a Z day even. Then you have the London Open creating the low of the day, New York session continuation, profit-taking hour. During the very profit-taking hour, you get the high of the day. Same thing here, London Open low, here's that low forming. Continuation on New York right here. In the red area, taking profits would be the high of the day up in here. Now, when you're looking at it, this is the fastest way to grow an appreciation for the algorithm at the interbank level. Because once you understand this, this will tell you exactly where a price should go in the time of the day. So in other words, we have a low here form in London, continuation during the New York session. All I'm doing is drawing the beginning of this green line, which delineates the beginning of the New York kill zone as I define it, and it ends it here. Okay, here's that continuation down into a bearish candle, which is a bullish order block. That's the buy for the New York kill zone. And you hold on to that until we enter this time window. When it begins the red portion, it'll start populating your chart at the bottom. We're not down there yet for today. Well, yeah, we just started it here. So we're just now entering the profit-taking time of the day. So you'd have to look over to the left side of your chart and see if there's any reason to peel off something on a long position. But here, this clearly, you can see, is a wonderful example how these kill zones give you the reference point of time of day. It doesn't give you the buy, the sell, or the level. Okay, it just tells you the time of day when to anticipate specific components of the daily range. Now, if we know that this is the time of day that creates the higher low, okay, and we know this time of day creates the higher low, in other words, London creates the higher low, and then London close, which is delineated by the red area over here, that will create the opposite end of the daily range. So if London creates the low of the day between these red time periods, okay, that's your London close kill zone, that will give you the opposite end of the daily range. 80% of the time. It will be in the upper 90% when you have the delineations, not delineations, if you have the determination of the daily range direction based on higher time frames. then you will be hitting it like upper 90s, like 98%. You'll be seeing London lows and London close highs forming in these specific times of the day. And again, it does not give you the specific points at which you buy or sell. It just gives you the time. So if you're getting long down in here in London, okay, or if you get long in New York with the anticipation of looking for higher prices, the first thing you have to submit to is you want to wait until your chart still at least pops up below here on the chart, like we just saw at the end of here. Now we're just now at the time where if you have been long, now it's okay to start looking for reasons to exit. Because if there was continuation on the New York portion of the day, you want to always leave something on till this time of day where we're at right now. Once we get to this point here, we want to start thinking about whether or not there's going to be a reason to anticipate profit taking, reversal, or consolidation. Okay, now I understand it's a little bit early. It's because I'm using the daylight savings time, and that's why you're seeing the time on these kill zones exactly as they are. This is my setting year-round. I don't change it. I don't deviate from it. I've never really given it out clearly to the free tutorials because it's just back and forth whether or not I want to do it or not. Okay, but you paid for it. This is how my settings are. Okay, so this is what I have on my charts all the time, and this is what I use for kill zones. So when I look at trading, the highest probability in terms of my setups will occur during these times of the day. Now, when they are forming, as long as we're inside this blue area in here, I can take a London entry. Once this closes, okay, and this ends, I cannot take another trade until this green level starts. Once that starts down here, then I can go in and take another trade. The reason why is because between the end of the London and the beginning of the New York kill zone, that is basically London lunch. And the algorithm goes into more or less a retracement or consolidation portion of the day. I don't want to be in that portion of the day. I want to wait until around 7 o'clock in the morning New York time. And once that begins, then I can go in and start taking new setups. Now, why is it specifically, well, let me hold off on that. Just remind me before I close. I'll open up the window and check and make sure I remembered everything. But just remind me if I don't talk about why 7 o'clock in the morning is important, just say so when I tell you I got the window open for the questions. So, all right, so the vertical lines, I'm delineating 20, okay, which is the end of the day for true day. And I'm delineating the midnight candle in New York. All these blue lines that go across the day from midnight or 5 GMT to 20, that delineates the opening price at midnight in New York. That's what this is right here, that blue line. Every day has that. The way I get that to show up on my chart, again, is I use the daily box indicator, and the settings for that is this. To look back on number of days, you can have that whatever you want it to be. Since I'm looking at the last month of data. Usually it's about 20 trading days of a month. The start time is 5.0, end is 5.5. I'm extending it to 20, which is end of true day. I'm not really so concerned about this showing up because I don't really want the box. And the line color, I have blue. And down here where it says properties, when you download this indicator, it's going to give you some like F, Z, something, whatever. You want to delete all that, okay, and just put in the capital letter O. And what that's going to show you is the opening price only with a blue line that begins at 5 GMT. And it extends out to 20. That's what these numbers tell you. And the horizontal levels, 0. I'm not really sure what that's all about, but the other settings are this here. Nothing else is changed by me down here. And when you do that, it'll populate all of your days with the midnight opening at 5 GMT. Now, if you want to fancy dance this, and we go into daylight savings time, you can change it to 5. Okay, or you can add another one. You can create another overlay. This is one of the indicators where you can actually have 2 of them or multiple ones, and it'll create overlays of another opening price. And sometimes the first 2 weeks of daylight savings time, I actually do that. I'll plot two of them. One I'll have as a red line delineating 0 GMT, opening price, and then I'll have the 5 GMT, which is midnight right now because we went back to standard time. We're not in daylight savings time now. So right now we are in what would be deemed as normal trading times for me. And this is the settings I have, but you can always augment it and use daylight savings time by going back to 4 GMT and then utilizing the 19. But I still like 20 because to me that's the end of the day. And then on the period separator, this indicator, it only allows you to have one at a time. You can't put like two. So if you're listening to this and you have a period separator program, or not program, but if you have one that you can use for MT4, and it has the ability to populate with more than just one vertical line, that would be awesome if you could share it, or if you can go in and change the code on the one I posted on the November thread and change that to make it so it can be done that way, where you can have more than just one vertical line delineation. That'd be great, because you can't really do two. Now, the way I got around that is I'll populate the chart with one period separator. Okay, right now I have it showing the 5 candle, and that's what you're seeing right here. And if I want to show the 20 level, okay, I end up creating another overlay with the period separator. I delete this one. In other words, I go in, I click highlight, and then delete it, but it doesn't take it off the chart. It just leaves the lines that you already created. Then you create another one, and you didn't just note it with 20. And then that way it'll populate your chart with the 5 and 20 levels, vertical lines. You can also do it with a box line chart indicator. You can extend that out and on these horizontal, not horizontal, on the properties level here, there is a thread. If you do a search on forexfactory.com, which is exactly where I got this indicator from. None of these indicators were ever created by me, so I don't have any ownership of that. That's why I linked you to where I got it from. You can get this daily lines boxes. The reason why this this parentheses around one, because I ended up creating a copy of it on my computer, and I ended up grabbing this one to use it. But the the indicator for this is daily space lines boxes, all one word. If you do a search on Forex Factory's forum, you actually get the thread that this gentleman put that on there, and gives you actually a lot more detail about what can be put in here for properties. It's amazing how much you can do with this one little indicator, but for me, I like only having what I have on the chart right now. Once in a while, when I'm teaching my sons, I'll delineate a box, okay, which represents, and I'll show you in a minute what I mean by it, but I will encapsulate the entire true day range with a shaded area. And when I do that, what I'm actually doing is I'm trying to force perspective on my sons when I'm teaching them, that I don't want them getting so close to the market that they're caring about all this price action here, or that they're caring so much about this price action over here. What I want them focused primarily on is the movement of price between midnight in New York and 20 over here. So the end of the day, that's here, but I want them to anticipate at midnight in New York to noon in New York. Those 12 hours of the day, that is the money zone. That's the part of the day where everything you're hoping to make is there. It's inside those two reference points. That's 12-hour period a day, midnight in New York to noon. Have that in your notes. That's where every bit of the money you anticipate making as a day trader, as a swing trader, as you're looking for your entries. It has to be in those time zones. Okay, between noon back all the way backwards into midnight, all the way through that encapsulates the entire daily range. So what that looks like is this. Hang on one second here. So this is how I teach my kids. I teach them to think about the range in terms of time relative to the kill zones. Now think about what I'm showing you here. This is the London kill zone. The green area is the New York kill zone. And this is with profit taken or London close time period. Okay. It is allowing overlap of daylight savings time in certain portions of these kill zones. And again, go back to the beginning of the video and you'll see the actual times I use. They don't change. I don't deviate from that. That's the ones I use all year round. In my own trading, this is it. These are the secret sauce settings, if you will. So from 5 GMT on MT4 platform with Forex LTD's data, okay, your chart would look just like this. So what I'm doing is I'm highlighting in a rectangle the entire daily range. Okay, the daily range as I define it in the form of true day. That's going to be midnight in New York. That's this candle right here. Okay, and the time at which the higher low forms is going to be in this blue area here. We see the high forming here. And the low on the day forms when? During the New York kill zone, which is a New York session reversal or market reversal profile. That's why if you're short on London or long, you always anticipate at least getting up around 7 o'clock in the morning, New York time, because you may be seeing a reversal unfolding. It's not just always get short at London and hold till the London close time. That's only when the market's predisposed to trend or extend for a much more lower, in this case, because it's been a bearish move here. You want to see the market reach for much lower, higher time frame objectives. But that may not always be the case, and that's why you anticipate the reversal market profile to occur during the New York open. It can happen in the London close portion of the day as well, but we'll have to teach more about that in December. But in here, you can see that the turning point or the low of the day formed inside the New York kill zone. There was still a really nice, respectable low, not too much far away from the low that was formed in New York here, but having this on your chart like this will help you think about why it's important to take a lot of your profits before the end of this red line here or the London close. Or in other words, you want to have a lion's portion of your profits on the day. Or if you're swing trading or position trading and you're looking to take some off, always try to do it inside the green or the red area. Always try to do that, because you don't know if you're actually formulating, if the market's forming rather a market reversal profile or just completely reversing on you altogether, and you don't want to be losing opportunities to get out at the most optimal level. Now, time of day is these kill zones here. This is where your entries and exits are going to be used. Your targets, okay, are going to be the green and the red area. It doesn't matter if it's bullish or bearish. You're always looking to take profits in the green or in the red. You're always looking for an opportunity to get long or short in the blue area. That's London, because you're anticipating the higher low forming. Once you have this on your chart, it doesn't take long to go back through data and see how many times the high and lows formed in this portion of the day. Look in the blue area every time we go through the charts. Significant highs and lows are forming. Now, this is a Z day. Start off with a London swing, then we go into Z day. So these are the types of days. You're going to get one of these a day, one of these a month. You're either going to lose money or you're going to give back profits in this type of trading environment. Okay, and this is the hardest one to learn, but you're going to have to encounter it, and you'll learn more data and reasons to anticipate these types of days. Usually when it's a lot of impact news, or if it's a lot of speeches, or if the market's already created the end of its range, it's been anticipated for the weekly objectives, then the market usually goes into this type of formation. And there's a nice one in London here, and then look what we have here in New York. Reversal profile. See that? Okay, we have a London low here with a high and a reversal in New York. So it helps you, number one, grow a greater appreciation for when signals or setups occur. It's not just going in looking for order blocks. It's not looking for liquidity voids or pools. It's blending the concepts of time relative to the kill zone and the higher time frame directional premise. Where should liquidity be reaching for on the daily chart? And are we inside of the time of day where the signal should be reaching for a target? And that's going to be specifically linked to encapsulating the day from New York candle all the way out to noon. That's the end of this red line here. So if we do that on a daily basis, and I'm going to counsel you to do that as exercise today for some homework, you're going to be looking for opportunities to see how many times over the course of November and October, having your chart set up like this, okay, it'll be just like you see mine is here. Okay, it's very clean. It doesn't have a whole lot of mumbo jumbo on it. It's very, very clean. It only has a couple different lines on it, and it's delineating time and price only. That gives your mind and your eye freedom to focus on the things that you need to be focusing on. You're not spending a whole lot of time adding all this stuff on your charts, like flout and Asian range, all that stuff. There's a time for that, and we're going to be implementing that in December. But for now, I want you to think just in pure terms, daily range and time and price. And by going over every single day in your own charts, and this is with your homework, and you don't have to do it all today. Some of you probably will just to say you got it done, and that's great. But I understand some of you aren't going to have the time to get through every single day. But I want you to print out every single trading day for the currency pair that you adopted as yours at the beginning of this mentorship. Remember, I told you to look at one pair. That was the one you're going to focus on through this entire mentorship. Well, you're going to do that for the entire month of October and for November. And you're going to print out literally every single day, just like this. This is about as much as you want. You want to have about this much data on each chart showing over here on the right chart. You don't care about this. You're only focusing on like a 15-minute time frame. Now, some of you are probably saying, well, I don't really intend to be a day trader, Michael, and the 15-minute chart's not going to do me any good. Yes, it will, because it's the same thing you're going to be utilizing when you take your trades, because when you enter your swing trades and your possession trades, you're still going to be entering this time of day. You're just going to be using limit orders, that's all. So even if you're awake or not awake, you're going to be given the context of framing your trades by entry and exit with limit orders. So that way you don't have to be up the entire time in London. You don't have to be up, to be in there doing anything. You just need to be up around New York midnight. You need to know what that opening price is. You have to know what that opening price is. So if you get up at midnight or 5 minutes after midnight, that's it. You wake up, go to the bathroom, get a glass of water, then there you go. You know your opening price. And then we'll be able to use that information to facilitate limit orders. Once you put the limit order in, it'll be a contingency order. In other words, you're going to have a limit order, and when that limit order fills, it'll activate a stop loss, and you'll have your limit order for take profits as well. So it'll all be contingent upon your entry based on that first limit order. So nothing can happen. Either you're going to get your fill and the stop goes in as that entry goes in, and you'll have first objective already there. So that when you wake up, what you'll know is if you've seen your entry, if you've been stopped out, or if you've taken first profit or about to take first profit. So don't think that you have to be in here all throughout the London session, because when we go into January, you're going to see a lot of that autopilot stuff going on, where I teach you the limit order basis. You get in, you get up. We're going to be meeting at midnight in New York time. We're going to set up the setups, put all the orders in, and then we're going to go away from the charts, and we won't come back on until 7 o'clock in the morning. And then we'll see what has done in the marketplace. Did our limit orders take our accounts into the marketplace, or did we get into the marketplace and did we get stopped out, or did we see our moves get tripped in by the limit order, and then did we take first profit? Because the wonderful outcome that we're looking for each morning is not to spend hours at a time, because I'll be honest with you, I don't trade like this. I don't trade. When you see me in here for these live sessions, when we do live sessions in London, I'm actually spending way more time than I actually do as a trader. I don't do that. I'm only doing that because I'm showing you my read on price, where I think price is going to go and what to anticipate as it's happening. But the way I actually trade is I'll wake up usually around 12:20 to 1 o'clock in the morning. Usually that's when I anticipate waking up or going to the charts. And I look at the opening price at the New York candle. Once I know that, I already know where my filter is for my buys and sells. Because if I'm already bullish, I'm going to look for an entry that's going to be below that opening price. It's as simple as that. There's no rocket science behind it because I'm utilizing Power 3. And here's the thing. If I have that delineation on my chart at the opening price at New York, and I'm bullish, okay, if I don't get that move below the opening price or my fill and price runs away, I don't care because I know I'm going to wake up in New York shortly before 7 o'clock in the morning when that kill zone starts. When I see that, I'm going to be anticipating a retracement. So it's going to give me not the full expected daily range, but it's going to give me something for my analysis, or at least give me the chance to get an opportunity to get in and get something out of the market range. But I don't need it to happen. I don't need it to happen because I know out of those 20 trading days, I know I'm going to catch a tiger by the tail and something's going to pay me. And the greatest thing you're going to learn from this mentorship is not to force the setups. Don't force the trades. And by having the things we're talking about here, it begins that whole framework so that way it helps you build the model that you're going to be trading in. That means you're not going to rush to get into a setup. You're not forcing the idea because you want to be long, so I'm just going to take any bullish order block. No, you're going to wait, and you have to operate inside these reference points in time. Because if we are, in fact, trying to get in line with IPDA, the interbank price delivery algorithm has specific parameters where it operates in. Price expands and contracts around specific times of the day. I have mapped that out for you, and you need to be focusing on where that is on the respective days that you're trading and for the respective pairs that you're trading. The dollar index, now I'm going to admit to you, I'm not in the marketplace. I did not trade last night. I don't trade usually until the New York session in Monday. Generally, I've grown to appreciate just waiting to see what happens on Monday's London Open. And guess what? I've already warned you ahead of time. There's going to be some times where moves happen, and I don't care. This isn't going to be the last time the dollar index moves around. This isn't going to be the entire weekly range. There's going to be opportunities between now and Friday's close. So don't think that just because you missed this one, if you didn't catch anything, don't worry about it. And you've probably already seen enough moves since the beginning of this mentorship that you've grown numb to the sensation of, oh, I missed that. Nobody should be feeling that at this point now because you see so many of them happening, which is exactly where you should be in the mentorship. So when we have these on our charts, kill zones at the bottom, and we have the opening price at midnight, we have about 60% of the understanding that's necessary to be profitable for the day. Now think about that. You already know what side of the marketplace you should be looking for if you're studying the higher time frames. So studying the higher time frames, that gives you what? The buy or sell for the day. It doesn't stop with just being a buyer or seller for the day using the higher time frames. It actually gives you the directional premise for the weekly range. All those same ideas, okay, if you extend that perspective out to a weekly chart, that gives you your short-term trading bias. If you look at a monthly chart, that gives you your position trade or swing trade bias. So depending upon what type of trader you're going to be, you're still going to use these ideas. The opening price at midnight, the kill zones, and you'll be able to operate in any capacity of trading. And now as a scalper, okay, let me do this. Hold on one second. Let's go to a euro dollar chart. Okay. And here's euro, and I'm going to show you what this looks like with okay, so that's the range, okay, across time of day, okay. So this is where basically all of the market moves that you're going to expect to make, this is where they occur. When we look at price, or when I look at price action, okay, when I have a 15-minute chart up, if I have a 30-minute or an hourly chart time showing on my charts, I'm not looking at every possible candle. My focus is narrowed to this portion of the day. Each interval of charting, whether it be 15-minute, 5-minute, 30-minute, 1 hour, 4 hour, this is where I'm looking. This is exactly where I'm honed in on. I don't care about anything else outside of that range of the day. I don't care, because when I understand this, okay, what it'll do is it'll zero me in on what IPDA is most likely forming for the daily high and the low. I don't care if there's going to be something out in FOMC at 2 o'clock in the afternoon. I don't care about that. I don't care if there's going to be some speech later on in the day that takes us past 12 o'clock. I'm usually out. 90% of my move, okay, is made between London and 10 o'clock in the morning New York time. I've either banked that much of the daily range or my position, and I have such an insignificant amount left on the trade, and I leave it on there to see what I can get past 11 o'clock. If I can get to noon and it expands the range a little bit more, in this case for the euro it would be going lower, then great, fine. But if it doesn't, that last portion is not going to undo a great deal of profitability for me, because I've already banked, or hopefully that's the MO for each day when you go in. You want to be banking your profits, because you don't know. You never know absolutely if the range is going to continue, because just because we're trading on a higher time frame premise that's higher or lower, that doesn't always equate to straight line runs where if you're long, you get like we've been seeing on the dollar index. I mean, look how many days up it's been. That's not a normal scenario. And for traders that are just starting and you're seeing these types of moves here in the dollar index, don't think that that's normal, because that's not normal. You don't get that many of successive or consecutive days in order back to back where they have all up closes like that. That's not a normal environment. We are trading in an extraordinary environment right now because it's highly sensitive to the U.S. elections. And there's a lot of other things that we can talk about that's globally behind these types of moves here too, but they're not the normal. So don't think that this is the normal expectation for price. It doesn't happen like this all the time. Usually you'll have about 3 or 4 days up, and you'll have 1, maybe 2 days retracement, and then you'll have another series of 2 or 3 days up, and it'll be 1 day retracement, and it'll be another expansion. That's a normal give and take type environment where the market will rally up a little bit, come back a little bit more, and then rally some more, come back a little bit, and then rally some more. That's a normal price delivery. But just seeing these extremely one-sided runs, don't think that that's how it is all the time, because it's not. The worst thing you can do is look at what we're seeing in recent weeks and just attribute that as the normal, because it's not. But when we focus on these reference points in time and keep them germane to the daily range ideas, between midnight, have this for your notes, this is going in your notes now, write this down, from midnight in New York to noon in New York, those 12 hours, that is what you are focusing on. And I don't care what type of trader you are. I don't care, because this is where every setup, every entry, and every exit is going to happen. Either your profitable entry is going to be made there, or your profitable exit is going to be at one of these kill zones in those time. It's as simple as that. If you are a scalper, okay, if you're a scalper, you can actually divide this into 2 portions of the day, like I used to do with the S&P. I would trade the S&P just like this, okay, but I would start it with midnight in New York, and I would close my half of the day around 5 o'clock in the morning, and then I would do the second portion at 9:30 when the equity markets will open up, and you'll see all that when I do the commodity stuff. But here, If you're a scalper, you can actually take this whole thing here in terms of time. You're a jockey for action. You just can't. You absolutely have to have, you know, a horse in the race all the time. You're always in there looking for a move. You have to be a part of something. You know, you can't not be a part of you know, every possible intraday fluctuation. What you can do is you can divide your day here. Okay, you can start at midnight. You'll get some kind of a move at midnight, and then you'll wait again, and you look for another setup that takes place on the second half of the day. You do that over the course of your studies also for October and November on a daily basis. Divide the day in half like that, and go down into the smaller time frame, like 5-minute chart, and you'll see a plethora of scalps that you can take for 10, 20 pips, you know, each portion of this range. So you can get something over on this half here, another on this half here. So you got to think in terms of modular price delivery. The market doesn't always give you straight shots from the beginning to the end of the day. In other words, every up close on a daily bar or daily candle doesn't begin at the opening price, go straight up to the close, and there's no retracements, there's no pauses. It doesn't work like that. You need to know when the daily range is going to cause a speed bump or a momentary consolidation in the daily range before the next leg up or lower is going to form. All of you are looking to give me the entry, give me the setups, give me the trades, but you have to understand how that daily range is going to formulate and create that daily range on your chart. It doesn't happen by randomness. It happens by specifics. And those specifics begin with what we're talking about here. Knowing what that opening price is at midnight, knowing what the kill zones are, and only focusing on this time of the day between midnight in New York to noon. Now, think about this. If this is what encapsulates the daily range, okay, let me do this. Let me actually put it on all my days, and we can go scroll back. Okay, so now I have all of my days, and let me maximize this so you can see it. So what I did was I delineated the entire range here, and I'm going to scale it back from not showing all the way to 20. I'm actually going to scale it only to show midnight to noon. Okay, so now I have every day delineated showing midnight candle in New York to this is where the end of the day should be. All right, so now here's when you have a great deal of clarity. It does not lull you into believing there's going to be a great deal of movement past this time of day. Now, it doesn't create, it doesn't, in other words, you don't want to look at it and say, okay, this has got to be the low of the day because this is what's painting on my chart now. The box says this is the low, and the box says this is the high, so this must be the daily range. No, I'm not saying that. What I am stating is once we get closer to this wall, okay, think about this whole vertical line right here at the end of that gray area that's being shaded. Look at that as still like this. That's like a brick wall for the daily range. It's going to take something amazingly significant to see some measurable move past that time of day. To get anything significant higher or lower past or right of that red line, it's going to take something extraordinary outside of what normally would be seen with IPDA. That means there may be something that comes out that's unexpected, like a terrorist attack. Somebody blows up the World Trade Center again. Somebody poisons the water supply. Something crazy, out of the normal. Something that's not normally or what would be expected in the delivery of price for that day. Because every single day, the daily high and low is already predetermined. It's going to be taken to a specific price level, higher or lower, before the midnight candle even opens. It's already predetermined. And it's all relative to what we teach in the flout. So when we get into this, I want you to look at your charts, okay, and kind of frame every single day with this idea of shading in your chart. And you don't need to do this through, forever. Once you know what you're looking for, you don't have to have these rectangles on your chart, because to me it's too much clutter. But to force perspective on you as the student, like I do with my kids, I teach this. My son Cody, he likes to see this because he likes to know. It's like coloring inside the lines. Okay. In other words, you don't want to be trading past this red line, because the expectation is there's not going to be much in the form of uniform price delivery or great deal of magnitude in terms higher or lower. Generally, you're going to see the low form inside of the red area. Okay, inside this red area, the low is going to form, and once that low is formed, you're probably not going to see much more of a lower low past or to the right of that red line. Now, for the sake of discussion, I'm going to scroll back through the charts. I'm going to show you, I got about 50 days worth of data, and I'm going to quickly just go through, and you see how many times price makes the higher low. Okay, in other words, if we had a movement up, the high forms right before that end of that shaded area. Okay, and it also will form the higher low in the red area. If it doesn't, it's usually going to be a market reversal profile in the green area. Now, before you quickly already run to your conclusion, say, well, that's all great, and it's obvious, it's in hindsight, but you can't appreciate what I'm about to teach you in December and going into January until you understand these reference points. Because if you don't understand these reference points and how IPDA is delivering price and why it stops doing what it normally does on a day-to-day basis at this time of day, you will be thinking as a great deal more of movement. And a lot of you are sending emails saying, look, I caught this move and this is what I'm in, and I'm making so much money and I'm hoping I get this much more move, but you're sending it to me at like 11:45 in the morning New York time. You're at the end of the battery life for your daily range, and you're still expecting a little bit more juice in there to give you that last target. And I'm not telling you anything about it, because you need to learn not to do that. If I tell you to do something, first of all, some of you aren't even listening when I tell you to do things. So if I tell you what to do with your trade, it's not your trade anymore. It's my trade. And if worst thing can happen is you be right about it, and I tell you shouldn't do that, you're going to attribute that as, well, I'm going to do this every time, when that's not what you should be doing. It's going to be those one time where you get paid to do something stupid, and I got paid to do things stupid a lot in my trading, and I'm trying to tell you to avoid all those things. You want to stick to where the delivery of results are consistent. You don't want to be trading in an aberration where, oh, this worked out for me this time, but I don't really know how to outline that in a way that is repeatable, or why I should expect it to happen again in the future. When I teach what I'm teaching here today, this is cookie cutter approach to trading. It's new deviations. It's clear. It's refined. It's absolutely defined in terms of time and price. Once you understand this, this makes it so much easier when we talk about the templates in December, which template you should be expecting for each day, where the higher low should be formed based on IPDA's flout. All those things will be much more clear to you because you'll understand this. This is why I stress all the time, it's not telling you when to get in and when to get out is what you're looking for. That's not the answer. The answer is understanding how price is going to be delivered each day, why it's going to be delivered at that time of day, and that period of the daily range. Just because when we look at charts like watch when I took Control Y. See those lines that pop up here? I'll toggle them on and off. Okay, that's the GMT delineators for MT4 platform. If you hold down Control and tap Y, you'll see them appear and disappear on your own charts. That's what everybody sees as the daily range. That's not what I see as the daily range. Okay, that's not what I see. IPDA is going to deliver the clearest, purest price action between midnight in New York, 12 a.m. New York time, to noon. If that is the parameters for the daily range, that in the truest sense, price will be delivered absolutely pristine, precisely, absolutely textbook between these two vertical delineations in time, then why would we ever want to trade outside of that? We shouldn't. Now, what makes it so strong is if we know that between midnight in New York and noon creates the daily range high and low, do we want to be trading exactly at midnight? No, because there's going to be generally a move up. That's what gives us the power 3 or Judas swing, or that manipulation aspect of how I trade. The market making perspective is going to be a drive higher. Drive higher above what? What are we reaching for? Well, it could be an old high like we have here, but the only filter we're really looking for is that opening price. That's what we need. We need that. Okay, so that's the delineation we look for. Okay, and when price goes above that and goes lower, once it takes out the opening price on the downside, once it trades above it, we are expecting, if we're bearish, we're looking for the daily range to expand on the downside. So if that's happening here, think about what this candle is in terms of all these candles that potentially are available in terms of time of day. That's a lot. These are each individual 15-minute candles. And we have the end of the kill zone for London down here. So let's delineate that with a vertical line so you can get a better feel for it. When I learned this, I'm telling you, it was very difficult for me to sleep. I got so excited because I was like, I can literally see what the range is most likely going to do before it does it. All right, so when we see this chart populate down here, this is actually where you got to draw it to, but I'm not sure why it doesn't do this all the way to the end of 10, but so just be mindful of that. So this is the end of the London Open kill zone, and that candle is here. It closes it right here. So between here, here, and here, that's all what time of day? It's London lunch, okay? We pick it up again here, and then now look, consolidation, 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 and then boom, we start running again, because that's when the London Open, the New York Open kill zone begins again, okay? Then we get the 8 o'clock in the morning to 8:30 in the morning retracement, which is the New York condition that we look for continuation. We'll talk more about that in December. But the breakdown there, continuation for the daily range. Now, even in here, think, where's the brick wall in the day? Over here. Now, it's not telling you where the low is. It's telling you that you have battery life still to reach for what objectives? Lower objectives. So we can look for more lower prices, okay? And we can do it inside of the green area. That's the New York Open kill zone. But as soon as we get into this red area, we got to be very, very careful. Do not anticipate a great deal of movement lower. Once we get into this area here, it's over. It's over. The chances of us seeing much more lower prices fall off precipitously. So here's what I want to ask you a question. If we know that the red line here, or noon, is the brick wall on the daily range, or where the battery life is no longer, it's dead, in other words. And everyone has a cell phone, I'm sure. You're all listening to me. Look at your cell phone and look up in the upper right-hand corner of your cell phone. How much battery life is on your phone right now? Now, if I look at my phone, right now I can see that I got about 3/4 of my battery life. Okay, that's not what I would be seeing if I'm looking at this daily range right now. I only have a couple candles left on the daily range. So the battery life is just dwindling. So think of it like this. Makes it even more clear. As we have the candle open up at midnight here. Okay, think of this like your battery meter on your phone. Okay, at midnight, your candle over here, this brick wall, that's the end of your battery. As you go through the day, your battery drains down. You're all through London. You got a great deal of battery life left still, all through London. Then we have our quiet period, London lunch. Then we go into New York, and we got about 50% of the battery life still. When we get down to here, we're real close to the end of our battery life for that daily range. So is it high probability to expect a setup in here? For instance, we have a up candle, a liquidity void. We retraced back to this candle. By all standards, this could be what? This could be a sell to go short. If we are in this time of day, is it high probability? It can happen. It absolutely can happen. But the likelihood of it happening, going below this low and significantly lower, is not high probability. This scenario here occurring during this green area of the time of day, in other words, if it was back here, much more high probability. In other words, if this would have rallied up to this candle in here or the body of this candle here, that would have been a wonderful sell, and you had everything on your side of the trade. You had a lot of battery life on the daily range. I hope I'm not confusing anybody up here with this. I'm just showing you between this vertical line at midnight to the end of the daily range here, where we encapsulate for the entire daily range. This just represents how much time. As we go and create more candles, this would dwindle down. Every new candle that forms, it just drops down one less bar. And eventually, when we're in the area we're at right now, we have very little battery life left on the daily range. In other words, it doesn't have that much time left in the day to create a sizable move. Whereas what that implies is, and what I'm trying to state is, the likelihood of the low forming is probably already in place right now. This candle forms at 14, right in here at this kill zone's beginning, exactly at the low at the time of our setups, or our London close kill zone. As soon as it hits that, boom, it hits that, immediately you're looking for reasons to be covering. Well, you're already should be expecting to take some covering there because you cleared out these equal lows over here. That's where that liquidity pool was. But I want you to take a look at this, okay, and just go through visually with me. I'm going to go through back about